Hello everyone, a very warm welcome to you. This is Rachel live from Kalkine Studios and you're watching the Market Movers. The ASX 200's edging higher on the second day of the month, defying inflation expectations and virus concerns. Commodity supercycle and economic recovery prospects are fueling the market momentum. On that note, let us zoom our lens on the market performance today and the drivers under the spotlight. Australian shares rose on Wednesday with the GDP data reflecting the country's economy, and it continued to grow in the first quarter with a barrage of micro numbers likely this week. Markets may be reflecting more frequently than ever. The latest economic data releases are reflecting a somewhat optimistic picture on a growth revival prospects. Australian gross domestic product rose 1.8% in seasonally adjusted chain volume terms in the March quarter. That's according to figures released today by the Australian Bureau of Statistics. With 1.8% growth in the March quarter, Australian economic activity has recovered to be above pre-pandemic levels and has grown 1.1% throughout the year. Meanwhile, US economic data is also shedding light on positive growth prospects. According to the Institute for Supply Management, the US manufacturing activity picked up pace in May as its index of national factory activity rose from 60.7 in April to a reading of 61.2. The pent-up demand amid a reopening of the economy has boosted orders. However, unfinished work has also piled up due to shortages of raw materials and labour. On the other hand, the Commerce Department says that US construction spending increased in April from the previous month as expenditures in non-residential and public projects compensated for the losses from reduced spending in the private construction sector. The report assumes significance since it shows the stimulus package is starting to reach individual projects on the ground. Having said that, the upbeat economic data seems to have again stoked investors' concerns that rising inflation may lead the Fed to unwind its stimulus measures. At a time when markets are cautiously waiting for a signal from the Fed, the key American employment figures scheduled later this week are more likely to provide a firmer steer on the central bank's policy action over the near term. The median forecasts are that 650,000 jobs were added in May, but the outcome could have a deviation following April's unexpectedly weak gain of 266,000 jobs. Strong commodity prices are boosting stocks of local mining and energy companies. ASX energy stocks witnessed their best day in 2 months amid favourable oil price dynamics. Australian energy players Santos, Oil Search, Woodside Petroleum and Beach Energy are facing a green trading session. In the commodities market, investors rediscovered their optimism after oil prices hit a 2-year high. Notably, OPEC and its allies agreed to relax curbs on oil production amid improving demand and a diminishing supply glut. OPEC's decision to hike output in July and its buoyant forecast over a global consumption rebound appear to have retained the bull recipe for the oil market. And now, before I share some trending updates in today's ASX top gainers, it's time for a very short break. Stay with us.
Property by Kalkine. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest slowdown in the property market, tune in on Kalkine TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with Kalkine.
Hello, this is Rachel live from Kalkine Studios and you're watching the Market Movers. Let's look at some more important updates from the commodity space. Global oil cartel OPEC plans to increase its oil output by 450,000 barrels a day starting in July. Meanwhile, in the US, President Joe Biden's administration plans to suspend all the oil and gas leases of the Alaska Wildlife Refuge that were allotted during the final days of Trump's administration. Having said that, it is yet to be seen whether speedier demand recovery occurs, allowing the markets to absorb these additional barrels. Furthermore, it'll be interesting to watch how OPEC will cope with a potential surge in Iranian oil output as the country aims to revive its 2015 nuclear deal with 6 world powers. Moving on now, signs of a commodities rally is also apparent in the iron ore price movement, with the commodity recording a rise of over 10% early this morning. The recent reports from China over the potential easing of restrictions on steel making in Tangshan ruled in favour of iron ore that broke back above $200 a tonne amid encouraging signs of higher steel production. China tried hard to jawbone the iron ore market lower. That was after announcing a crackdown on speculation and market regularities. However, the country's efforts appear to be insufficient in driving down the steelmaking ingredients prices for a prolonged period. On that note, a huge surge in iron ore prices seems to be a catalyst for iron ore miners today. Australian miners rose for a 5th straight session today. Heavyweight miners such as Fortescue Metals, Rio Tinto and BHP are the leading gainers on the board. However, gold miners edged lower, tracking weaker bullion prices. Australian gold miners Regis Resources and Silver Lake led to the ASX 200 losers pack. Besides Northern Star Resources, De Grey Mining, Gold Resources and Ramelius Resources also slipped lower. Gold miners Evolution Mining and Resolute Mining also shed gains. On Tuesday, gold slipped below a near 5-month price peak hit earlier during the session as robust US manufacturing data and higher Treasury yields dented its appeal. And now, before I share some trending updates on today's ASX top gainers, it's time for a short break.
At Kalkine TV, our team of experts, anchors and specialists gear up to provide you with trending and breakthrough business stories, insights and market updates. The BNPL space did enormously well in 2020 and the trend may repeat in 2021. If you do not wish to miss the high-level insights, do watch out for Kalkine TV. Brace yourself as we bring to you the plethora of different sectoral and market intelligence as well as analysis on a daily basis. Kalkine TV, keep watching.
This is Andy Liu broadcasting from kalkinemedia studio in Australia, and I'll be hosting the new Kalkine Wellness Show. The half-hour show will cover topics from how wellness as a concept has become even more significant during COVID to how becoming vegan may improve your health and much more. We are excited to showcase our live streaming show to our audience of millions overseas and in Australia. Tune in to Kalkine TV and join me Tuesday to Thursday weekly in the mornings.
Hello and welcome back. This is Rachel live from Kalkine Studios and you're watching the Market Movers. Let's look at the other latest news now. Virus concerns continue to weigh on the Australian shares. Victoria has extended its 7-day circuit breaker lockdown until the 10th of June at midnight in response to the growing COVID cluster in Melbourne's northern suburbs. As part of the restrictions, residents cannot leave their homes unless it's for one of the 5 approved reasons with specific kilometre restrictions. That's for shopping, authorised work or education, exercise, caregiving, compassionate and medical reasons, and also to get vaccinated. Australia's second most populous state was plunged into the lockdown on May the 27th after the state reported its first locally transmitted cases in almost 3 months early last week, forcing its near 7 million residents to remain home except for essential business. Victoria has reported 6 new cases so far today. There are currently 67 active cases in the state as of this report. And now, next in our show, let us look at stock movers during the day. The shares of fintech and neobank Dough jumped on announcing its partnership with OFX Group to offer its foreign exchange services. The AI-powered financial well-being app provider Dough says that the long-term partnership is expected to benefit its customers from OFX's bank-beating exchange rates. The Australian foreign exchange provider OFX would be Dough's exclusive partner for foreign exchange for Goodmans by Dough app, which offers US single stock and exchange traded fund trading. Dough also says that the partnership with OFX could be extended to offer international money services as an integrated feature in the Dough banking app over time. Moving on now, Worley remained one of the leading gainers on the ASX so far today. Engineering solutions firm Worley has said it's on track for an improved second half performance in financial year 2021. The company's order backlog stood at $14.1 billion. That's up from $13.5 billion in the first half. The company added that sales pipeline of financial year 2022 is 25 times the achieved sales of financial year 2020 under low carbon hydrogen. Moving on now, emerging lithium mining company Pilbara Minerals and the largest integrated poultry producer across both Australia and New Zealand, the Inghams Group, also climbed up the ASX ladder today. Healthcare giant CSL also seems to be an investor's favourite today. And now, before I share today's ASX top gainers, it's time for a quick break.
At Kalkine TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming, financial and stock market news. Kalkine TV.
Hello, this is Rachel live from Kalkine Studios and you're watching The Market Movers. Let's look at this ASX listed company now. Shares of engineering contractor the CIMIC Group rose as units get new contracts in Queensland. The company announced that its unit UGL has secured a contract for design, construction and installation of a high voltage transmission line from Kidston to Mount Fox in Queensland and a new 275 kilovolts switching station located at Mount Fox. According to the company, this contract will provide revenue of around $150 million to UGL. Moving on, clinical stage life sciences company Invion eyes the worst day in 1.5 years on a discounted placement. The company is expecting to receive funding of around $4.5 million from RMW Chow Health Technology. That's a Hong Kong registered company. This would be via a share placement at an issue price of 1.4 cents per share, a 30% discount to the stock's closing price of 2 cents on the 28th of May when it last traded. The company has entered into agreements with RMW to co-develop Photosoft technology for treatment of atherosclerosis, a cardiovascular disease and infectious diseases. Moving on now, infant formula player Bubs Australia is also sliding their shares lower amid its response to an ASX price query. Bubs stated that it is not aware of any information concerning it that has not been announced to the market, which could trigger in the recent trading in its securities. The company further stated that it is only aware of the publicly reported news that the Chinese government announced it is scrapping a policy limiting couples to 2 children and will now permit families to have 3 children without financial penalty with the formal introduction of a 3-child policy. Well, that's all from me for now. Stay tuned for more live updates on Kalkine TV across the economy, markets and sectors. I'm Rachel, signing off for now.